Good morning, everyone. Hope you are doing well. Today we're broadcasting live from Lithuania. Exciting time. Finally, we've got to meet a lot of our colleagues here in DappRadar's offices. So, really, an exciting week for us. And actually, that's the reason why we moved the AMA today. It's not, you know, that normally it happens on Thursdays. So, yeah, it's a special week for DappRadar. And today we have a really interesting discussion about differences between the crypto winter that we experienced in 2018 and the crash that is currently affecting the markets. And to talk about it, I want to welcome today's special guest, Boris Ribo, part of our research team at DappRadar, and with a really interesting background in capital markets to help us understand the situation from that perspective too. How are you doing today, Boris?
Wonderful. Thank you much. What a glorious morning, afternoon, or evening, depending where people are. But the weather is very nice today, very warm, very pleasant.
I'm glad to hear that. So before we start, I just want to remind everyone here that, as always, we will be recording the session, so you can listen to that or any of our previous shows on that Radar's YouTube channel, where you will also find hundreds of educational videos and market updates. Cool. So it is no secret that we are currently undergoing a bear season, a prolonged period where we are seeing the price of all cryptocurrencies come crashing down. Bitcoin has lost 55% since reaching an all-time high of almost 70,000 in November of 2021. And just a few weeks ago, we saw how Terra, the second largest DeFi ecosystem at that time, collapsed, leaving 60 billion in dead money in what is the largest loss of wealth, sorry, in modern history. But let's start understanding what was the situation in 2018 and what is the situation now, so we can really draw the comparisons. Boris, I want to ask first. Let's start with the macroeconomic perspective. You were involved in the capital markets for the last years before joining DappRadar. So, how was the situation in 2018 from the macro perspective, and how does it compare to what we are living right now in 2022?
Well, from a macro perspective, in terms of traditional capital, we were, I would say, the more stable position compared to now. I mean, generally, the biggest issue, I would say, or the biggest difference from today compared to 2018 is just the sheer amount of money that got pumped into the capital markets. Just to give you a perspective, before the COVID crisis and the general heating up of the market, there was 4 trillion US dollars in circulation as of January 2020. So that figure quickly grew to 6 trillion by January 2021. And by October, it jumped to uh, 20 trillion. So we have an overall 80% of all the dollars that were printed in this period of time. So naturally, all that money got pumped into various stocks, and naturally, it found itself into the crypto market.
That's
So
mind blowing. That statistic is mind blowing. Like 80% of the dollars in history were printed just in a matter of two years. It's it's just mind blowing.
we can't really say the what ramification. I mean, we can begin to guess what ramifications it has for all economies, but we're going to be feeling the effects of it for many years to come. Um, Moreover, how does that relate to the currency chain? Well, the rates, borrowing rates were a lot different. They were surprisingly higher back in 2018, which was 1.75% compared to 0.75 now. And the Fed increased it to 1%. So the borrowing rates are still a lot cheaper now than it was before. And of course, there's no avoiding the elephant in the room, the current geopolitical crisis that we have in Europe, namely the war, the sanctions, and everything else happening is of course affecting the capital market. It's unlike what we had in 2018. Of course, there was a much smaller, more contained conflict happening in the Donbass region. We did have a heated situation with China, as some people called it a trade war at the time with Trump, but really in the grander scale of things, it's not compared to or not comparable to the state that we are in now.
Yeah, I
How
have to agree with you.
so how does this relate to the crypto market? I would say paradoxically, the crypto market, despite the comparable dip that we have now, it's in a lot better state than it was in 2018. My biggest assessment is that we, as the crypto market, are a lot more stable because we reached the mainstream. Back in 2018, we didn't have as many projects, we didn't have as much infrastructure. We just had Bitcoin and Ethereum, which was gaining ground. And it was still, for lack of a better word, like crypto was still a meme in that sense. There was mostly for
Mm.
eccentrics and YOLO retail investors, somebody who's looking for that next Apple, next Amazon, to dump their life savings and become a millionaire overnight. So it was still much more of a casino at that time, and it wasn't as structured, and we didn't have as much of an interesting market as we have today. Since then, it's not only for retail investors; it's a lot more serious players. So hedge funds are investing into crypto. Traditional banking is very interested in it. The governments are starting to regulate and make this space more accessible and more safer for general public. And as overall, the space has become a lot more consolidated, a lot more open. And as such, any shocks that happen to the system, I think that we're going to recover it much more quickly than what we did in 2018 or even any other time. So I don't think we will have, crashes that we had like in 2013, um, when Silk Road happened and then Bitcoin just became overly
Yeah.
relevant for nearly a decade.
Yeah. So in 20, let's go back a bit in time and stick a bit around the macro perspective. Just trying to understand. In 2018, actually, the markets were flourishing. 10 years were passed from the Great Recession, the real estate bubble crisis of subprime mortgage loans that collapsed the entire economy, right? We all remember what happened in 2008. And in 2018, the economy was actually very positive. There was a feeling of yes, we already recovered from what happened 10 years ago, from the Lehman Brothers situation. Um, and and there was no really macroeconomic pressure from to the crypto markets coming from the capital markets. And actually, I think at that time, the Nasdaq was actually playing really, really strongly. Stocks like Nvidia were thriving, right? And people were really enjoying. And actually, I think this also paved the way for speculators because at that time, you pointed right. In 2018, crypto was, let's call it was still a niche. It was just a handful of people trying to speculate, trying to find the next Amazon, trying to find the next Google, and just speculating about what happened to the price of Bitcoin. So I got to agree that the crypto industry at that point was way more immature, but also it's very important to point out that the macroeconomic situation at that time was positive. So there was no that negative effect coming from the outside. And what we are seeing right now is that the capital markets are really struggling from the geopolitical situation. That the war in Ukraine accentuated the the problems that were already very palpable. You mentioned that 80% of the total dollars in circulation were printed in just a span of 2 years. So of course, this generated a lot of pressure to the inflation rates, we were expecting inflation to get high around this time, but we never expected that the war in Ukraine would accelerate that situation so much. So in this year we're facing a lot of pressure from the capital markets, and actually in this year it's also relevant to mention that Bitcoin and the capital markets reach an all-time high in correlation. What this means is that the most the performance of the S&P 500, the Nasdaq, and the Dow Jones has never affected more the price of Bitcoin. And unfortunately, due to the problems of inflation, of Ukraine, and the financial crisis, the capital markets are not performing well. And this has hindered a lot the crypto industry.
If I may add some context, just before we go into the doom and gloom, just for reference, in 2008, Dow Jones, which is the general measure of capital markets, and some people would argue the economy as a whole, went from just shy of 15,000 and dropped to just over 5,000. So it decreased by a factor of 3 in the matter of a year. Well, actually, half a year. So from July 2008. S&P, which is another major
Index.
major. I wanted to say a major thermometer and the pulse of the economy. It dropped from 1,500 to under 500. So also a major drop by a factor of 3, all in a space of half a year. So a major decrease in the market. Whether by today's standards, we went from the S&P went just under 5,000, so we were at 4,800, and we dropped to 4,000. So we only dropped by 800 points, which is a negligible drop in the grand scheme of things. Likewise, Dow Jones, it only dropped by 250 points. So we were just over 3,500, and then we dropped to just over 3,000. So the drops comparatively that are happening now are not that major. If people remember from the capital markets, the biggest shock that we experienced was in the beginning of 2020, where the markets dropped from 30,000 to, for example, Dow Jones dropped from 30,000 to 18,000, which is nearly a 50% drop. And
we're talking about March 2020, right? Right after the COVID liquidity crunch.
Yes, exactly. So comparatively speaking, that was a bigger shock to the system than whatever we're experiencing now. And thankfully, the longer markets exist, the more resistant they are to external shocks and different pressures. So overall, I would say we're in a much better position now than we were a few years ago.
Yeah, but from the macroeconomic perspective, the situation is way worse. The effect, again, like what we are seeing right now with the geopolitical situation, has exacerbated the problems of the capital markets. And unfortunately, with the high correlation still between Bitcoin and S&P, we see that if S&P goes down, Bitcoin will go down. And unfortunately, this is where we are standing right now. The current crash that we are seeing has a lot to do with our own crypto internal stuff, but also we gotta say that the geopolitical situation is playing a big role on the current crypto situation. So now that we understand the macro situation, which again is way worse right now, let's see how the crypto market has evolved from 2018, where you mentioned that it was basically a niche, just a group of people putting their money into projects like IOTA, like Dash, like Monero, Monero is still a really good project, but IOTA and Dash, Bitcoin Cash, these projects that have gone basically to oblivion. and the industry really looks really different right now. Also, at that point in time, there was the ICO boom, where projects were basically launching via initial coin offerings. Do you remember that time, Boris?
Oh, I remember it very fondly, as I was working as a capital markets analyst at a private bank. Um,
Yeah.
we were personally also very interested in because the returns were crazy, any bigger than anything that we've ever seen in such a short amount of time. Even leveraged options were not trading that much. I mean, we saw returns of tens and thousands of percent within mere months, if not weeks. So of course that kind of returns are very, very interesting. However, it's good that we didn't, because at the time I remember there was that space was just very, very dangerous, very precarious.
Yeah, it was very mature, I would say. If we compare, for example, the regulations, which we are still, let's say, at a very unregulated environment, but at that time it was even more regulated. If you created an account in Binance or in Kraken or in Coinbase, you didn't even go through the KYC process. You could basically buy Bitcoin, buy Ethereum, basically just deposit, and yes, I got my crypto back. And there were no KYC
Yeah.
processes. They were not basically any regulations in place. It was the wild, wild west at that point. So we also start to see how the market is evolving in that perspective. And the IC market actually came at a great timing, because people were already recovered from that great recession. There were a lot of retail investors that were eager to put their money somewhere to find the best yields. And the initial coin offerings were, at first glance, that movement where people were going to become or find the next Amazon, the next Apple, the next Microsoft. So that was the ICO. Unfortunately, the market pumped so hard with these ICOs, then projects started to fail, right? A lot of projects, similar to what we see in the NFT market right now, there were a lot of projects launching via ICOs. Basically, every day a new crypto project was launching via ICOs. But what happened 3 months later? 3 months later, similar to what we see in NFTs, the founders basically abandoned the project, rock people, and of course, the confidence in the crypto market became basically non-existent. So that was the main cause of the 2018 collapse of the crypto market. It was not because of external factors like what we are seeing right now, the enormous pressure put by the capital markets. It was just a matter of the perception of the same crypto market. Okay, this is a very volatile space. Why is it pumping so hard? So it was kind of a natural contraction where the investors, retail investors mostly at that time, individual investors, um, basically, yeah, lost a lot of money because projects were not fulfilling their goals. They were abandoning their projects. So yeah, of course, the trust in the space uh, came to zero, and the market came crashing down. And we stayed like that for almost 2 years, from January of 2018 to yeah, let's say October, November of 2020. Sorry, of 2019. The market stayed basically parallel, moving sideways. Bitcoin came from reaching 20,000 almost in December 2017, January 2018. It came crashing down to 3,000. So it was not good at all. And people were already calling for the death of the crypto market, but it's not. Projects really started building at that time, and we are going to discuss this later, because these crypto winter periods are good for projects to develop. But we will talk about it later. So now that we understand that, how was the situation in 2018, what can you tell us about what we are seeing in the crypto market, Boris? How do you see it? Because you told us that you see the crypto industry right now as a more evolved place, and we know probably which ways, but I'm eager to know what are your thoughts? Why is the industry in a better position right now?
Uh, Mostly, it comes down to one factor, and that we've hit the mainstream. We, for the lack of better words, we made it, baby. Uh, there's no such thing as bad publicity, and with the boom of NFTs, everybody knows what crypto is now. Or at least people have to be completely detached from the mainstream news sources, media, or in any social situations, not to have heard or at least somehow superficially known about cryptocurrencies. Everybody on the face of the earth has at least heard of us, and the cycle goes from first people ignore you, then they start listening to you, and then they join you because they realize they can't be ignored. And because of that, we as a crypto industry, we cannot be ignored. People are starting to join us. So not only do we see major hedge funds, we see institutional investors pouring into the place. We see major venture funds starting to pump money into it, developing blockchain games. Yes, there will be people who trip along the way, and there will be failed experiments, but every
Terra?
experimentation leads to something greater. And we
Yeah,
are,
yeah.
as a state, as in terms of infrastructure, we can offer a lot more than we did back then in 2018. So the way I see it, yes, sure, the shock that happened right now is um, a significant one, but in terms of overall capital loss, and unfortunately, it's been a cavalcade of things compounding upon each other. First, we had, macro pressure, then we had issues with Luna, then we had the overall exodus of people de-investing from NFTs, at least when it comes to overall trading volumes. Yes, sure, it happened, but overall, we established completely new markets, and those markets are going to develop in the future. What we had is the initial pilot light, the burst of flame to start everything going, and from those embers, we're going to grow as an industry.
Oh, yeah, I really like how you put it. So one thing that it's really important to understand is how the profile of investors changed. Because in 2018, as we mentioned before, it was basically people, regular people, the average Joe, trying to find the next gem. So most of the capital in the crypto industry at that time was retail investors or individual investors. And right now, the profile has changed to institutions, corporations, and even countries adopting Bitcoin as a legal tender. You told us NFTs help us, yeah, get crypto, get to mainstream. That is completely true. But also, how many people, especially, for example, people the age of our parents learned about crypto because El Salvador adopted Bitcoin as a legal tender, right? And
Yeah,
this is the kind of adoption that we see right now that makes that industry a more mature place to be right now. And also the infrastructure. At that point, it was basically smart contracts networks. It was basically Ethereum and Monero and IOTA. So it was that at that point, and now we see how different blockchains have launched successfully: Solana, Avalanche, Terra, and all these blockchains that are now host to, well, Terra not anymore, but the other ones have flourished into DeFi ecosystem, holding hundreds of billions in total value locked. In 2018, DeFi was not probably just in the mind of Stani Kuchkov and Andre Cronje, right? And right now, DeFi is our bread and butter. We cannot imagine crypto without DeFi, and same with NFTs. And also important, we mentioned how projects used this crypto winter to keep building. Some projects that survived the ICO era and actually launched via ICO, like the Centraland engine, uh, were consolidated during 2019. Axie Infinity, the popular uh, game, launched also in 2019. DappRadar actually also launched in 2018. So you see how it's also a good time. It's a time to depurate the industry where you really can see which projects are successfully building something and which projects are here only for the gains, right? So this is also an interesting perspective. So are we going to stay back and keep crying about how the industry keep crashing down, or are we going to take advantage of this time and go and keep building for the future? So
Absolutely. If I can have some gallows humor and a bit of levity, the markets are becoming a lot more efficient. Previously, in the capital markets, if you guys remember the Lehman Brothers crisis, it took 20 years for the market to lose $40 billion. Now we're becoming a lot more efficient, and with the latest Luna crash, we lost 40 million in a matter of a couple of months. So we're becoming a lot more streamlined.
and probably also, how do you call it? Less sensitive. Yeah, exactly. We are also kind of this becoming less sensitive to this big, because it's impressive to me. Like that the situation with Terra, it's absolutely not fascinating because it's quite the opposite, but it's very interesting. We just witnessed how the largest wealth in modern history just happened in front of our eyes, and in a matter of days the market lost 60 billion, like 60 billion lost, vanished from earth in just 48 hours. Luna was the seventh largest cryptocurrency when the USD began to be pegged, right? And the US dollar of Terra was the 10th largest cryptocurrency, the third largest stablecoin. So we got two top 10 cryptocurrencies basically going to zero. So just big volumes about how also less sensitive we are to these price changes. So also something to think about. Right. So let's see if I would like to stop here for a moment and ask if any one of our audience wants to join the discussion or have any question about what we are talking about. And in the meantime, Boris, I want to ask you, what are your expectations for, because let's call it, we are in the middle of a crypto winter. There is no other ways to sugarcoat it. A crypto winter is a prolonged period where the price of assets go down. It's a prolonged period characterized by a sustained and general drop in the price of cryptocurrencies, which also hinders the enthusiasm for the industry. So we are currently seeing that situation, although the enthusiasm is still a bit high, which is positive. But what are your expectations of this crypto winter period that we are currently undergoing?
To go back to macro, and the biggest driver because the way I see it is that crypto is strongly correlated with the Nasdaq, and the thing that drives it, funnily enough, is cheap energy, so cheap gas and oil, and cheap loans, and the abundance of technological advancements such as graphics cards,
Mhm.
semiconducting wafers, and other high technologies. So, as we stand right now, oil is going for around, it's bouncing between 100 to $120 a barrel. Comparatively speaking, this is unfortunately very close to where we were in 2008, where we had as much as $140
Yep.
per barrel. So what I see is that this is an exogenous shock to the system, and it's not going to persist for very long time. I'm thinking that before the end of the year, we'll get the price of oil down to more manageable levels, so somewhere to around $60 to $80 a barrel. However, the biggest risk factor, which I am personally, it's speculative, but with the way that the situation is developing, is how China is positioning itself around Taiwan. For those of you who don't know, Taiwan is a major producer of semiconductor wafers and chips needed for Bitcoin mining, those ASIC chips. Um, According to some sources, they control as much as 60% of the semiconductor market. Now, if
Okay.
there was any kind of instability in that region, we would see a major spike. First of all, the cost of graphics cards, the for Nvidia and AMD would rise. This would mean that a lot of miners would not get the latest chips for um, their mining operations. So authorizations and sorry, cracking blocks on the Bitcoin blockchain would become a lot more expensive and would take a lot longer to crack. So I would see the price of Bitcoin dropping further. This would, of course, mean possibly people would start entering into either different cryptocurrencies or possibly moving into other assets. So Taiwan will be a much bigger player and will affect cryptocurrencies in a much more profound fashion than the current prices are. So that is something that we all have to keep in mind. However,
No,
in
hopefully that doesn't scale any further.
yeah, in general terms, I think the market is going to generally behave sideways until the geopolitical crisis in Central Europe subsides. Um, Granted, regardless in which way it will resolve itself, I think the markets will respond in a much more positive fashion when the hostilities have ceased. And generally, when there have been any discussions around ceasefires or potential peace agreements, the markets have generally acted very positively. And I think the longer this crisis goes on, the more it will become obvious that the sanction situation will become untenable, and we're going to see a lot more leeway and a lot more easing of the financial relations that are happening now between the West and Russia. As we already saw, a lot of countries in the West are trying to um, keep buying oil at lower prices, so people will not be affected by the inflation and the rising gas prices. So we'll see how it happens and how the crisis will resolve itself. But I think we shouldn't wait longer than until the end of the year in the worst case scenario.
What's interesting? I mean, yeah, for me, it's the macro perspective is that for me, we are already in a recession. If you look at the financial indicators, it looks like well, high inflation, unsustained growth, economic growth, high interest rates, and high price of commodities, and so on. So we are already in a recession, and my concern is that the correlation between Bitcoin and capital markets, once again, I repeat, is at an all-time high. So basically, Bitcoin picked the worst time to be highly correlated with the capital markets. So that is my concern. Although there are a lot of things to be positive about, like adoption, we are seeing how cryptocurrencies are quickly and widely adopted, especially in some places like emerging markets, emerging economies. We saw what happened in El Salvador. Argentina is also passing some Bitcoin regulations to yeah, basically to regulate crypto taxes. Also, the Europeans on the United States will accelerate their regulations too. But there is a sense that it's just a matter of months when we see digital assets, well, digital currencies being widely used, which is for me a positive sign. Um, Talking about the adoption, what do you think would be the reaction of the market if cryptocurrencies are adopted, for example, in Russia or in China? Do you think it would be positive for the market, or do you think the market could see it as a negative if Russia goes tomorrow and says, "Yeah, let's adopt cryptocurrencies"?
Let's define a few terms. When we say cryptocurrencies, we mean decentralized cryptocurrencies.
Yeah, I mean digital assets. What we are used to seeing, and yeah, I'm not talking about the digital yuan like what China is building or what other countries have in mind. But let's say Russia allows the trading of Bitcoin and other cryptocurrencies to be used by their citizens.
Well, that's essentially what I was going at, because the prospect of digital money is very appealing to authoritarian governments, because that's how they control people's assets. I mean, digital yuan. I'm not sure if people heard the story, but that personally just shocked me. Is that the government can essentially say, "We need more liquidity on the market, so you have to spend your money, and if you don't spend your money, it will essentially vanish from your bank account." So that is pretty scary, how the central banks can control digital money. That to me is why decentralization is very important. Now, and because of that, I think it's very unlikely that very autocratic countries will allow decentralized currency within their sphere of political influence, because that will essentially be a black eye in their monetary policy. That would mean for Russia, if there was any mass adoption, that would mean that people would have access to the Western markets. That would also mean that Russians would be able to circumvent Russia's currently
Exactly.
very strict ruble policy. That would also mean that indirectly, if people were trying to buy or sell things from Russia, they will be circumventing the sanctions that are imposed on it by a majority of the Western world. So on the one side, the mass adoption of crypto payment systems would essentially allow everyday people like you and me to decide how they want to act in this political climate. If somebody wants to buy, despite the sanctions, if somebody wants to buy whatever it is they want to buy from Russia, they could do so with Bitcoin. If people want to continue trading with other countries that um, politically are considered as savory, they can do so, and that's essentially the truest movement of the market, not constrained by higher authority. On the other hand, that would mean that because people act in what they think is best, we would possibly see a lot more movements to regulate it, to hamper this freedom of financial transfer. And I think, although it's a very nice sentiment, and I personally very much support it, and I think decentralization of money from any one central authority towards the people is a very good thing. It's very hard to reach that, because the further we go on, the more regulated our world becomes. And of course, thankfully to crypto, and why I like this industry, that people are constantly coming up with new ways of becoming decentralized and new ways of giving more power to the individual as opposed to a central authority.
Yeah, and talking about no, totally agree. An interesting actually perspective. But talking about regulations, in 2018, actually another big factor of the market crash at that point, it was the fears of countries actually even banning, prohibiting, like China was very vocal about prohibiting cryptocurrencies. Same with India and Russia, that at that time has had the most Bitcoin mining power. And right now, if we see regulations as a positive. We understand that a highly decentralized environment is probably it's needed. It could be beneficial for our society. So we are eager to see how lawmakers accelerate their policy processes to regulate digital assets, right? So it's going to be, I think, positive, right, in this time for the industry. And also positive for the industry is going to be the level of adoption that we are going to have, especially coming from blockchain games. It's going to be interesting how this plays out. And just to finish before leaving your closing thoughts, I think it's also necessary to understand that, like every other market in basically, yeah, any other market in the world, the crypto market is composed by cycles, right? We see a bull run that lasts, I don't know, 3 6 months, and then we see a natural consolidation period, right? That can also last for normally 3 to 6 months. However, the situation is a bit different. We talked about how the macroeconomic situation is really, really bad right now. So, from my personal view, I don't see that changing in the short term. So, please do not consider this financial advice by any means, but I think we are going to head into for me, it's going to be 8 to 18 months of sideways movements. I don't think we are going to see a boom until next year. To be very honest, but of course, if we got like a big adoption coming from Bitcoin, where we really start to see decouplement from the capital markets, the situation can change. But to be fair, like the macroeconomic pressure is now too high, so it's going to be difficult to see a shift in the birth rate right now. And also, it's going to be interesting to see if NFTs are going to decouple also from the crypto market. That if we analyze the performance of some NFTs, art NFTs, for example, they are starting to decouple. It's going to be really interesting to see if in 3 months, in 6 months, the NFTs actually start to go up in value, while the cryptocurrency market sticks to, well, it gets the correlation still having with the capital markets. So it's going to be interesting the next few months. So be very careful, be patient, and remember that in these crypto winter periods, successful projects build. For newcomers, to into this space, a crypto winter might feel like, yes, the crypto bubble has finally burst. Everything is done. But the truth is not. The blockchain industry has already experienced crypto winter in the past, in 2013, in 2018, and has been resilient. So now that the industry is in a more better position, it's way more mature. We're going to resist it. We're going to make it out. So right now it's a good time to get more involved in the space, play the games that at some point were too expensive to get in. Right now is a good moment to experiment, to get involved, to prepare yourself for the next 2 or 3 years when we are going to see the biggest bull run in history. You need to be prepared. You need to be part of the industry at this moment to enjoy success when we reach it. Okay, so I don't see that there is anyone who wants to join the discussion or has any question, Boris. So I'm going to ask you if you have any closing remarks or thoughts.
One thing I wanted to add to your previous statement when you said that the users changed, I would like to add a little more color to that from my perspective as from a traditional capital market to the way I see it evolving now. That absolutely agree more than 100% that the market is changing and we have a lot more institutional investors, but also the type of retail investor also changed. Back in like 2018 and previously, we just had the eccentrics, the really wild people there who were just throwing money casino fashion, hoping that one day it will pan out. Right
Yep.
now we're having a lot different people. So now we have a lot of younger people coming into the sphere as well, and more importantly, we also have a lot older people coming. When I say older, people who are 45 and above. I hear just generally from my entourage, I have people who are like my parents' age, people who are in the 60s and 70s talking, hey, I heard about this Bitcoin. Is it, and it's kind of down right now. Is it good to invest? People are saying, oh, I heard this thing called DeFi. Can you tell me something about it? So not only do we see the general public is becoming more aware of it, and because not only is there is a push now, with let's say the early success and then eventual plummet of Robinhood, but the proof of concept is that trading for retail investors work, and a lot of people are trying to capitalize on that. We're democratizing, can't pronounce that word, democratizing the horizons for trading for the capital markets, and thereby also extending it into the crypto markets as well, where everyday people like you and me are also becoming more interested, who previously were not aware of the crypto markets, are becoming exposed to them and are developing an appetite for those kind of assets. So in the future, I'll see a lot more people will be coming to DappRadar, because a lot of people will be unaware and uninformed of what things are and how they behave. And I think we could play a very vital part into guiding those people and explaining them how the markets work, what are the
Mhm.
things to look out for, and we can basically guide them through these interesting times, and hopefully help people make better informed financial decisions that will lead them to prosperity.
Right. No, I totally agree with you. Um, Actually, even us as retail investors are learning more and becoming more involved with the space. So that I had to agree with you. And the demographic, about thinking about demographics, millennials and Gen Z are going to be leading this digital revolution, right? And so it's also interesting to think with that in mind. Perfect. Thank you very much, Boris. As always, it was really nice discussion, and thank you for your valuable insights. And for people in the audience, I want to give a big thanks to all of you for being active members of our community. And just want to remind that each week on Thursdays, normally this was a special occasion. On Thursday, we have this market mover session where we discuss different trends and topics affecting crypto market and DappRadars mid-session, where Ian talks down with relevant crypto projects in his AMA weekly events. Tomorrow, he's going to speak with CryptoBlades, this Binance-based blockchain game, which at one point in August last year became the most played game in the space. So you don't want to miss that. It's going to be interesting to see how things are changing from their point of view, and what news are the CryptoBlades team eager to announce. So also don't forget to subscribe to our newsletter and social media channels on Twitter, Discord, Instagram, and YouTube. And that would be all for today. Thank you very much again. Wish you a lovely day and have an amazing weekend. Thank you very much.
All the best. Thank you for having me, Pedro.
Bye.
All